Well, hello everybody. Nice to see you here today for one of Rock Advisors webinars. We try and think about topics that nobody else is talking about that we believe you should know about. And today we've got, I think, just an extraordinarily interesting topic on MURBs. Just to remind you that we do webinars from time to time, maybe one a month, one every a couple every month. And we've got a couple coming up. October 21, we're going to be talking about municipal taxes, how they're calculated, the appeal process, and so on, with two great speakers, David Gibson and Stephen Longos. David is a tax consultant, Stephen's a tax lawyer. And then on November 12th, we got a really interesting seminar or webinar on estate freezes with Trevor Perry, and Trevor is a tax attorney. So you want to join those. There's no charge for them, and it just helps you run your business. We also run our annual conference. This is a big deal at the Metro Toronto Convention Center on December 2nd. It's run as part of the Toronto Real Estate Forum. I think this, Rod, is our 15th year for running this event, and it is all about apartment development and building affordable housing. The budget will be in by then also, so maybe we'll have some more direction from the federal government as to what's coming down the pipeline. Next year, February 3rd to March 10th, and we've run this many times before, as our apartment development masterclass. This is a hands-on course on the development of apartments, and it's a series of live webinars that we do with experts, and we priced it, and we priced it accordingly, depending whether you want to buy the whole course or whether you want to attend specific sessions. But these are hands-on, and they're ideal, I think, for you apartment developers who are pivoting to apartments, or if you're a larger apartment developer, it's a great training tool for your staff. Okay. I think I saw Dave here a minute ago. For those of you who'd like to find more about who we are, what we do, Dave Price is our director of sales, and Dave's generally the first point of contact for most people in our company. And Dave has joined us here somewhere. Dave, maybe you can put your email into the chat. Okay. In terms of Rock Advisors, some of our team members are on here right now. There's Dave in the middle. We've got a team of 20 people. And I think most people are kind of surprised when they find out that we have 20 people, because, Rod and I are kind of out there leading the charge with Dave, but we've got really a skilled group of people in the background here. And these are all the managers of the various departments. So for today, really, first, why are we doing this webinar? Where we believe that the MURB program was probably one of the most successful apartment development programs that have been run in Canada. And the Liberal government is saying that they're going to bring it back. So this is really saying, hey, if this program comes back, we want to be ahead of the game. We want to be prepared for what's coming. So today, all we can do is look at the historical program. So we don't know what program is going to be brought forward, when it's going to be brought forward, but if it does, we think it's a game changer for apartment development, and us as apartment brokers, apartment consultants, as apartment joint venture partners, we want to be ready for this, right? So we are advocating through the National Apartment Council, our industry lobby group, for the resurrection of this program. And when it comes, we want to be ready. So that's the purpose of today's seminar. We're wearing belt and suspenders and so on. Okay, so what's the marketplace reality? So what's going on right now? Well, Mark Carney has promised more housing. That is an ambitious task of a new government, and there are a lot of competing agendas right now. So Carney says he's going to promise more housing. I'll show you later on in his campaign promise. He said he would bring the MURB program back. If that campaign promise hadn't been made, we wouldn't be here today telling you about this, okay? We all know about the rental shortage. There's no point talking about it anymore. The housing shortage, the affordability issues and so on. Well-defined, first time in history, it was a Canadian election issue, one of the top 3 issues. And then, if you're a construction worker today, the condo market has, cratered. The new home construction has dramatically down. And so you've got lots of unemployed construction workers and more being created as the cranes get taken down, as the condos that are in production get finished. Those jobs are not being replaced by new condos. So, and there's one other group of people. There are the investors, all those investors who bought condos, bought houses and things like that. they are not investing anymore. We want to create, the country of Canada should create a great investment vehicle for them. And really what we said in our initial slide is that what the MURB program will do, it will unleash the private sector's capital and its ingenuity. So let's get Canadians' capital invested in Canada, not going to other countries, and let's get developers and unleash their creativity, start building apartments for what we want. All right. Okay. So what is the MURB program? Well, the MURB program was a program that existed between 1974 and 1981. It got approximately 200,000 apartments built. Remember, that was 200,000 apartments when Canada only had 25 million people, right? So today we're what, 41 or 42 million people. So if you look on a per capita basis, if the program were to work as well as it did between 74 and 81, I think it could work better because the need is more. It would supply 326,000 units if you actually do the math on a per capita basis comparing to our population today. That's 326,000 apartments that the private sector is going to build, that the government doesn't have to get involved in. All they have to do is bring back this program. So that's why we think it's an important program. That's probably more than 10% of what we need. Now, there's no quick solution to the housing problem we have. It's been created over the last 40 years, but this is one that can go ahead quickly, efficiently by the private sector. Now, what makes the MURB program work? It's basically a couple of changes in the tax code, okay? And that's all you need is a few changes in the tax code and a couple of changes at CMHC, and we know what those are and we know how they work. So what you've got here is a playbook. You've got historical memory to make the program work. In a nutshell, what you can do is you can claim rental losses. So when you first build a building, there's a rental loss. That rental loss typically stays in the corporation you're in, right? Well, you can now take that rental loss. You can take soft costs, okay? The cost upfront to build a building, and you can take an accelerated depreciation, and all those things can be a deduction off your regular income. So if you're a factory worker, a lawyer, a nurse, whatever income you're making, these losses can come off, and you'll pay less taxes, in your day job, so to speak, and that will help fund this investment. That's really the beauty of this. You get a tax break for investing, but then the other beauty is when you sell it, you pay the tax back. Okay, so it's not like the taxpayer is funding this, but there is that interim period between, let's say, year 1 when you invest and year 10 when you sell, and that arbitrage is what funds the MURB program. I'm going to show you an actual numerical example a little bit later on. Okay, so let's think about what a MURB investor is. So a MURB investor, he invests in a pool of cash to build a low-rise, a mid-rise. It can be a high-rise building, right? As opposed to what's been happening for the last 20 or 30 years is people buying pre-sale construction condos. And listen, while that market lasted, it seemed like a good idea, but a lot of problems are being exposed now. Really just the wrong unit in the wrong place at the wrong time, okay? Built by someone who bought it. That was, to a large extent, a speculator. You bought it 5 years before it was built. You hoped the market would go up. You hope rents would keep going up. Well, they didn't. And now it's a real problem, right? So what we're saying is you professionally get a pool of investors together, you syndicate it properly, you've got a development team, a construction team, a property management team, an asset management team, and this becomes a longer-term investment for you, helped by the tax concessions you get, and it's great, proper, professional, purpose-built rental housing for renters, not individual condos scattered all over the place, owned by anybody or anyone. So we're comparing the MURB program to the individual buying pre-construction condos, and we've learned from that, as well as individuals buying single-family homes and renting to students and immigrants. That is a shadow model. It's a backdoor model. MURB is the front door. We're going to build the right apartment in the right place at the right time with the right financing, okay? This is a great idea. All right, so the MURB advantages are, first of all, you have developers and syndicators will build them. They historically were smaller buildings, let's say 50 to 150. There were some 300 unit buildings. There's nothing wrong with building 2, 3, 4, 500 unit building MURB programs. They're just going to be a little more complicated to syndicate and things like that. What you'll also get with the MURB program is a proper unit mix. When the condo market was going hot by investors, everybody was buying the smallest one bedroom, and then they could, just to get into the market. No long-term thinking developer would ever do that. Okay. That was just bad advice. And that's why in Toronto, we've got tens of thousands of these tiny apartments that are functionally obsolescent, been built because we weren't thinking about this on a global basis, just one investor just trying to get into the game. So we're going to build the right unit mix, the right unit size. They could be built for rent or single family homes also in a community. Today, we haven't had one of these built in Canada. Thousands of them built in the US. That's something we could be doing. And, we all want densification. We all want higher density in transit areas, suburban, urban product, and things like that. And apartments, fill that gap nicely. Okay. So the MURB program is good news if you combine it with the other things going. And MURBs alone don't solve the problem. This is complex. We're not going to explain the problem in a 1 hour webinar. But basically, MURBs are good news, and especially if you combine them with the 2003 elimination of HST. That's already happened. It runs out in 2031. So we got to lobby for that again and for clear definition there. Zoning and development charge reforms, municipal tax incentives. And if we could have, and based on Carney's election promise, we could have a MURB 2.0 experience. Okay, so what's MURB 2.0? We don't know. It hasn't been announced yet. But we do know what MURB 1.0 is. So we're going to make the assumption that if they brought back the MURB 1.0 program, this is what the numbers would look like. And it's compelling. It's compelling to some extent. Compelling more so because there aren't any other opportunities. Nothing else pencils out right now. Okay. All right. Next slide, Rod. I can talk faster if you guys want me to. Anyways, so here's the example. So what we did is we took a typical 400 unit apartment building, and this was actually put in the report by BILD, B-I-L-D, the Home Builders Association of the Greater Toronto Area. So they said, look, and it was a paper that they basically wrote on affordable rental, on rental, saying it doesn't pencil out, and it doesn't. So, and you can go find that online if you want to. So if you went to build a 400 unit purpose-built rental buildings, big building, the cost would be about $226 million or about $567,000 per unit. Let's assume you get $4 in rent and including all the other services, $411, and you had 30% operating costs. Well, that deal doesn't pencil out today. That's going to give you a development yield lower than the cap rate you can sell it for. So if you build it, you would build it, sell it, and lose money. Nobody's going to do that. And that's before you even have any ongoing problems or changes in the marketplace and things like that. So we said, all right, what if a developer built this 400 unit rental building and sold 800 MURB units? Now you could sell 400 MURB units if you want, right? But if you don't have the MURB, you're typically not buying the condo. So if there's 400 units, you're not going to have 400 individual buyers. You're buying like 1/400th or 1/800th of the entire building. Okay, it's called an undivided interest. So we just made the decision that we're going to build this 400 unit building. It's kind of like an IPO. Okay, we're taking a company public, we're putting it up for sale, and we're going to have 800 investors. Right, so we're going to have 800 MURB units sold at $75,000 each. Okay, so if you do the math for that building that cost $226 million, you're going to have $60 million in equity. So that's coming from 800 individual investors, doctors, lawyers, nurses, construction workers, baristas. Fair enough? 800 investors, could be less than 800 investors. People buy 2 or people buy 10. And then so we're going to get $660 million in equity raised, and then there'll be a mortgage or a construction loan of $167,000. Okay? That's the starting point. Okay? If that confused you, you might as well just log off. It's going to get more confusing from here. Okay? All right. So we got the MURB unit selling for $75,000. Okay? Your upfront cost deductions, so that's your soft costs, your financing costs, maybe your architect's costs are upfront soft costs. It's not bricks and mortar. The program allows you to deduct that in the year that it was incurred. So in the first couple of years, you're going to spend those soft costs. that amount is passed through to your income. Okay. Then you get a depreciation expense. Okay. And so the depreciation expense is basically you get to depreciate the building at a higher rate than normal. So you get to depreciate it at 10% instead of 5%. Okay. And then you get to take that expense off your other income, doctor, lawyer, nurse, construction worker, and so on, right? So if you assume that you are a person making a good income, okay, you're in the 50, so your total tax deduction is $162,000. If you are in the 53% tax break, 53% tax break, well, welcome to Ontario. If you live here, your marginal tax rate is 53.5%, right? So if you take that 162,000 and take 53% of it, that's an $87,000 saving that you're going to get. Make sense? So you spend $75,000, you got $87,000 worth of deductions. So you actually made $12,000. Okay. Now that's just the way these numbers worked out. Okay. But basically, the cost you put in should be offset by and large by the tax credits you get in the first 1, 2, or 3 years. That's why the program works. Okay. Now, it's not like you're never going to pay that tax. You're going to pay that tax later on sale, and we're going to show you that in a minute. Okay. So upon sale of the asset, so we're going to assume that it's sold at a 4.25 cap, 10 years down the road. That's the 400 unit building we built. It's going to be sold for, $400,000 per unit per MURB share. Okay. So basically the building sold, Rod just pointed, for $325 million. Okay. It cost 226 to build. So there was a $99 million profit. Fair enough? Now, so we're going to break it down by MURB shares. So you had $124,000 profit. The capital gain is calculated by dividing it in two and multiplying by 53%. So you're going to pay $33,000 in taxes. Fair enough? On that gain you made. So here's where the government gets paid back 10 years down the road. Everybody with me? Just nod yes. Okay, good, good. All right. Then there's something else. You depreciated the building. She said, hey, the building's like a car. You depreciate it, except buildings don't depreciate, they appreciate. So revenue CRA says, hey, I gave you all that recapture expense, right? But you didn't. It went up in value, so I want that recapture back. So of that $130,000, you got a $53,000 deduction. You got to pay that back, dude. Okay? So there's your 70 you're paying back. So you wind up paying $103,000 in taxes. But you know what? You made a gain, right? So let's see what you'll wind up with. Your MURB unit is now worth $406,000. Fair enough? You minus $189,000, and that $189,000 was the balance of the mortgage, because you haven't paid off the mortgage, right? Remember, there's initial mortgage that got paid off somewhat, and then you've had to give back the $103,000. So what you wound up making was $114,000. Okay? Now, we have not shown you all the calculations here. We're showing you the highlight of what the investor receives back. There's a whole bunch of other things that go into this. There's a bunch of other assumptions we made. We didn't take into account the cash flow that you received while the building was being built, and things like that. But at a high level, you sort of get the idea. Okay. Now let's go to the next page. So to summarize it, and maybe this will make it clear or help you a little bit, you invested $75,000 to buy the MURB unit, right? So there were 800 of you that wrote a check for $75,000. Okay. At the end of the MURB period, at the end of year 10, you got $114,000. Fair enough? If you go back to the previous slide, you'll see that was the last number we showed at the end of that chart. Plus, you got a tax saving of $82,000. Fair enough? For investing in the MURB unit. So over a 10-year period, you made $196,000. You with me? Okay. So basically, you put in 75, and 10 years later, you got 2.5 times back. So that's an equity multiple of 2.5. Now, it gets more complicated than that with the taxes back and forth, but in a nutshell, that's what we're saying is going to happen. You make the investment and you get some tax breaks up front. Later on, you sell the building, you kind of pay most of those taxes back, and you wind up with $114,000 profit at the end of the period. Okay. All right. Next slide. So that's the MURB program. I've oversimplified it by a little bit, but you get the idea. It's funded by those losses in the early years. Now, this is this was before the election. This was the Liberals' housing platform, and they stated here very clearly that we are going to bring back the MURB program. So the MURB program should be on their agenda somewhere. We've got a budget coming at the beginning of November. We'll see if it's there. Okay, so that was the initiation of the MURB program. It was a Liberal program brought in 1974. So it's their program. And what we're saying as developers, this is a good program. It worked, and you know it worked, and you know the rules. You know that you've got a history here. And if in that 10-year period between 74 and 81, it produced 200,000 units, where our population was 25 million people, we should be able to produce more than that today, given that our population is so much larger, and that larger population has created, quite frankly, this housing shortage, right? All right, so let's go back to kind of say, let's look at the overall rental market. What stays the same? Here we are, at the end of, getting to the end of 2025, the rental shortage, it continues to get worse. And that's a little bit not scary. We all know this, that if housing development, whether it be for sale or rental or condos, the overall numbers are lower, significantly lower than they were in previous years. So that means the rental shortage is going to get worse. We continue to take in immigrants. Nobody's going home, right? And so on. So the rental shortage continues. The affordability crisis probably gets worse. Yes, rents did come off a little bit, but they're still high, and they're still going up over the long term. The government bureaucracy, that has not been trimmed. So getting an apartment building built, if you're a developer, it takes you 5 years, let's say, to get a building built. 3 of those years go in planning, 2 years for construction, 1 more year for stabilization. So government bureaucracy continues to grow. Now, what can change, and which way are things going? I think interest rates are going down. Nobody knows for sure, but generally interest rates going down are good for apartment development. Interest rates going down typically also means that the economy is stalling, and the government is dropping interest rates to stimulate the economy. That also creates inflation. So this is a very, very complex problem. The economy, nobody knows for sure. If you look at the stock market, you think everything's great. If you look at the price of gold, you realize maybe things aren't that great. People are kind of running for shelter. The economy is probably going down. Vacancies, we've seen them trend up in the last year. No sign they're coming down materially, but vacancies are generally going up. And rents are, you can't say this across the board. It's not fair to say, but let's say rents in downtown Toronto are going down, rents in downtown Vancouver are going down, rents in Niagara Falls may be going up, right? But overall, the sentiment is rents are going down. But generally, the coordination and the cooperation, I'm going to, give the benefit of the doubt here between the federal, municipal, federal, provincial, municipal, CMHC, CRA. Hopefully that cooperation and coordination is going up. It's been difficult for developers, and every year it's been getting more and more complex. So that's kind of a little bit of the state of the nation, right? Now, nobody knows what's going to happen, but let's just step back and prognosticate a little bit, right? In terms of what could happen. And to know what's going to happen, you need to look back and see what's happened. So Rod and I were sitting around one day noodling, and we said, how do we show this in a chart format, right? And so we think that let's just go back to 2010, right? In between 2010 and 2021, I'm going to call that the golden years. Everybody looked smart. Interest rates were going down. Everything went well. And so as time went on, as we go from left to right, apartment values on the vertical axis went up. You weren't even doing anything, right? Interest rates are dropping. The cost of financing is the largest cost you got. Apartment values went up. All of a sudden in 2021, we got hit with the COVID fog, right? Incredibly, apartments went up even faster. During COVID, everybody stayed home. They dropped interest rates. So vacancies went down. Rents stayed the same because they were frozen, right? Yeah, and people didn't move out. But during that difficult period when retail were getting killed, theaters were getting killed, restaurants were getting slaughtered, apartments keep crept up because people lived in their apartments, right? Then in June 2022, when all of a sudden, holy smoke, we have printed so much money and inflation started going up, the governments, Canada and America, started raising interest rates, right? And when interest rates go up, apartment values go down. Now, in theory, apartment values should have gone down quite a bit, but they didn't. Interest rates tripled. They went from 2% to 6%. Apartment values changed a little bit, but nobody sold, right? No apartment guys got in trouble. That's the beauty of the apartment business. It's a nice, safe business, but we did see the volume of transactions go down. It still hasn't returned to what it was pre-COVID in the golden years. But let's say things are getting better. People have to sell. People want to buy. Money needs to get placed. There's a ton of money sitting in the sidelines. So here we are, 24, getting to the end of 25. And I'm going to call from 24 on, after the election of Donald Trump, the disruption years. And let's just call that a fog or a haze. We don't know what's going to happen. Fair enough? As we go through trade wars, just all the problems that we've got, right? So there's two choices. You're either going to come out of this fog, and I kind of liken it to being in a sandstorm. You know, when you see the Jeep just come out of it, right? That's what we're in, that kind of fog right now. Where are we going to come out of it, right? And we think that because of all the things you mentioned before about Canada and the shortage of housing, that once this clears up and we get some direction, right? And that could take time. I'm just picking the Trump era, right, as a time of distortion or queuing. We think that the new normal is going to be a construction boom, and the pent-up demand, by the time, hopefully, the municipalities, the various levels of government get their act together, we bring back the MURB program and put in various fixes that everyone agrees need to happen but haven't happened, we could see a real boom of apartments. And at Rock Advisors, we are spending our time getting ready for an apartment development boom. Okay. So let me show you now the MURB program in a formulaic basis. Okay. This is nothing is simple. So the first thing I said is it's just two-line change in the tax code. Let's bring back the MURB program. That was an overstatement, right? This is a very, very complex business. So basically what I'm saying is that if we get MURB 2.0 or a new MURB program, right? Could be announced by the Liberals, right? So basically what you're saying, you take the MURB program of 1974, you minus or you toggle off the alternative minimum tax. Because after the MURB program ended in 82 and 83, they brought in the alternative minimum tax program saying you can't drop your tax to zero no matter how many deductions you have. That has to be looked at, right? Then you want to make the MURB program affordable. Well, what we're saying is, well, maybe you don't have to make it affordable because the affordability is already there. So you take the MURB program minus the alternative minimum tax, you add to it the two CMHC current programs that are in place, and they are good programs, right? MLI Select and ACLP. So there's your financing piece. There's your affordability component that's already built in, already functioning. And plus you have to add the assisted rental program. Many people have forgotten that when the MURB program was brought in, it was brought in together with the ARP program, the assisted rental program. You get the acronyms get a little confusing, okay? And so the assisted rental program, what it did, it said, well, wait a minute. If I'm going to build in Toronto, it's a lot harder to make the deal work than in Edmonton, right? Or in Moose Jaw or in St. John or whatever, something like that. So what they did is you added an additional supplemental financing or grant or mortgage or second mortgage, it varied, to offset regional disparity, okay? It's not the same financial numbers across the country. It's not the same for concrete. It's not the same for wood. It's not the same for downtown. It's not the same for suburban, urban, or rural, right? This is complex. So you needed a formula to adjust for that. So I'm trying to show you here that even something relatively simple, and we say bring back the MURB program, right? It's complicated. And the whole problem that we've got with the rental housing business is complicated. This is a relatively simple solution to what is a real serious problem in Canada. Okay. Okay, next slide, Rod. So the amazing thing is when it's hard to get unanimity on anything, every single entity in Canada that has looked at housing has pretty much said, bring back the MURB program. Rod, I'm going to say it a second time. Just a great sound clip, okay? Every single person who's done any study on the rental housing shortage in Canada has said, bring back the MURB program. The problem is that's all they said was bring back the MURB program. Nobody delved into it the way that we wound up doing because nobody else was doing it and said, it's not just bring it back, it's you got to look at the old program, you got to adjust for the new. And it's not as simple as it is, but it is simpler than any other solution, certainly simpler than the government building housing. So we couldn't find anybody who categorically even hinted to say that the MURB program was not a good idea. So everyone's at the rental housing shortage has said the MURB program is a good idea. We need to put this on the agenda. Okay. So to put it on the agenda, we did this, and I know some of you on here are developers. When I saw the list of people, Peter, Alan, Wallace, if you're here, right? We've had discussions with you guys about the National Apartment Council. That is a nonprofit that we have started, and there's the QR code. Just pick up your phone and look at it. And the QR code is it's an association of private apartment developers to lobby the federal government, maybe later the provincial governments, to create legislation, tax code, and practices to stimulate apartment development in Canada. You all know the problems that not having enough housing creates. If it's not causing a problem for you, it's causing a problem for your children. It's causing a problem for immigrants. It's causing a problem for Canadians at large, right? And so our goal in the National Apartment Council is to advocate for legislation that will lead to apartment development. Now, 90% of all the apartments built in Canada were built by the private sector. So the history reveals the future. Why wouldn't we want to motivate the same group of people who built virtually all the apartments in Canada to build the next tranche of apartments that we need, right? And so that's what the National Apartment Council is there to do. And quite frankly, we need your help because this is a crisis that we are in. It's a crisis that we've created by having too much legislation. And it's ironic that to solve the problem, we're saying you need one more piece of legislation, but it's a piece of legislation that worked before. Okay? I think that's everything I want to say. If there are any questions, we'll be Rod, let's go full screen, see who's here, if anyone's here. Okay, but we think this is a great program. We are lobbying for the program. And if anybody has a public voice or wants to, if you go to our LinkedIn account, you'll see where the National Apartment Council, we got a LinkedIn account, my personal account. We're constantly talking to people and encouraging people to talk about the MURB program. That's how you get something done in terms of a groundswell. Okay, if there's questions, happy to answer them. If not, we wish you all the best.
I think it's a good introduction to be aware of what the MURB's all about.
And it's complex. It's complex. This is not like a soundbite. And most people have said, just bring back the MURB program. That's not enough. It's got to be re-explained to a whole new generation of parliamentarians, bureaucrats, and people at Revenue Canada and CMHC. So anyways, thank you very much for joining us, and we wish you well.